If you are holding or trading crypto, then you need to be prepared for volatility over the next week. This is because between now and Friday, there is a very busy schedule for events and catalysts taking place in the traditional markets. As we all know by now, what happens in the traditional markets can have a significant effect on crypto as well. Not only are some of the largest US corporations reporting their earnings, there is also an FOMC meeting and the release of multiple highly anticipated data points which will signal whether or not the Federal Reserve's attempts at reversing inflation are working, as well as whether or not they could push the US into a recession. In this video, I will be covering all these events and more so you can be prepared for what is to come over the rest of the week. Before I get started with all of that, make sure to subscribe and activate the bell icon so you do not miss out on more videos like this, as well as everything else I post there on the channel. So let's kick it off, and we can take a look at some of the companies reporting their earnings this week. Earnings reports are key events in traditional markets because they indicate how well a company has performed over the past quarter. While investors can get an idea of how well a company has performed from other data points, the exact amounts are non-public until these reports. Because of that, analysts come up with estimates for each company's earnings, which investors can use in the research and analysis. However, these estimates are not always accurate, which is why earnings reports can be a cause of major volatility when a company either significantly over or underperforms their estimates. When this happens, there's usually a large move as investors reposition to account for the new information. This calendar shows us which companies will be reporting each day this week, as well as some other information such as estimates and market cap. As you can see, today Microsoft, Alphabet, which is the parent company of Google, and Visa are all reporting. Wednesday, the company to watch will be Facebook, or rather Meta, as it is officially rebranded to now. On Thursday, we have Apple, Amazon, and MasterCard. Then on Friday, there is Exxon and Procter & Gamble. While earnings, of course, affect the price of the stock reporting, many of the companies I just listed are included in the S&P 500 or the Nasdaq indexes. And because they are some of the largest components of those indexes, their earnings can have a strong effect on the price of the S&P 500 and Nasdaq respectively. Furthermore, certain companies can be used as a kind of proxy for different industries, such as ExxonMobil and the oil and gas industry, or Procter & Gamble and the consumer goods industry. So their earnings can also have elevated levels of importance. Because of all these reports are spread across the week, it is possible that we could see a lot of sharp moves in a short span of time. So if you trade on shorter time frames, this can be both an opportunity and a risk, and you can have a greater chance of catching a big move, but also being stopped out or liquidated if you are caught on the wrong side of the move. So in general, be cautious, but for a trader like I am, I love these opportunities, and I've been talking about my strategy. If you haven't watched my previous video, go back and watch that one, and I think that you're gonna find something valuable out of that. So another thing I want to talk about before we move on to some significant events you need to pay attention to during the rest of the week. I want to talk about today's sponsor, which is Link2. So as many of you probably know, investing into high growth, late stage private companies before they have a liquidity event like an acquisition or prior to an IPO and being publicly traded, it can be highly profitable and generate significant returns. Unfortunately, most private equity and venture capital investment opportunities are only available to large institutional investment houses or other elite entities with privileged access. In fact, only 2% of eligible investors are currently active in private markets. However, we found an interesting company that is disrupting the space for the average investor. Link2 enables investors to access this top-performing investment class. They have already $135 million invested on the platform at a $10,000 minimum, unlike PE and VC firms with an average of $7.5 million investment into a variety of successful $1 billion plus valuation private companies like Ripple Labs, Uphold, BitPay, Whoop, and EatJust. You can become a Link2 member and see the company listings and proprietary research by simply registering on link2.com. So if you are curious about alternative investments and want to explore the highest return asset class over the past 5 years. Check out link2.com or download their app and invest today. Moving on to the significant events this week, it is likely that the most important event will be the press conference on Wednesday, where the Federal Reserve will announce any changes to monetary policy, including how much they are going to raise the federal funds rate. As you may remember, inflation data released earlier this month was higher than expected, in sharp contrast to what was expected the last time the Fed met. As a result, it would not be surprising to see another raise of 0.75%. One way we can see what the market expected the Fed to do is by taking a look at the federal funds rate futures here, which tells us that the markets have currently priced in a 77.5% chance that the Fed will raise rates by 0.75% and a 22.5% chance that they will raise them by 1%. While any rate change is of course important to pay attention to, it is not the only thing investors watch out for. During the press conference, we will also learn how the Fed is interpreting the economic data available to them and their plans for the future. For example, they may indicate that they believe their current plan is still valid and will not be making any major changes in direction, or they could announce that they believe they need to be more aggressive with their policy, which could include something like further reducing the size of their balance sheet or increasing the speed at which they reduce it. Anything along those lines of being more aggressive could be very bearish. The situation is of course very complex, but to summarize, the Fed is trying to reduce inflation without being too aggressive, and they don't really want to push the US into a recession. And they have already had to be more aggressive than they previously believed would be needed, so any further aggression would signal that they saw the situation as fairly desperate. Speaking of recession, another key piece of data being released this week on Thursday is the first estimate for the US Q2 GDP. This is important because the most common unofficial definition of a recession is if the GDP declines for 2 consecutive quarters. In Q1, the US GDP declined by 1.6%, meaning that this estimate could tell us whether or not the US is in a recession. Right now, estimates for Q2 GDP are varied. The Atlanta Fed's GDP Now model is estimating another decline of 1.6%. However, other entities such as Goldman Sachs are predicting that the GDP will see a small positive growth of around 0.7%. In other words, whether the official estimate comes out as positive or negative, there will be investors caught on the wrong side of a trade needing to reposition. So this will be another catalyst for some volatility. So while what I have covered so far are the top things to watch out for this week, there are a number of other pieces of data that, while not quite as important, still have the potential to affect the markets. These include housing market data, personal income and spending data, employment numbers, consumer sentiment, and more. There is a good reason why CNBC is saying this week is going to be perhaps the most important of the entire summer. Outside of the potential for volatility, all the data released this week should also give us a better idea of where the markets are headed in the mid to long term, which is something that has been fairly uncertain so far this year. One more interesting thing to pay attention to throughout all of this will be whether or not Bitcoin's correlation with traditional markets increases or decreases. Right here are the charts of Bitcoin's correlation to both the S&P 500 and the Nasdaq on the daily time frame. While those correlations have decreased slightly over the past few days, they are still up significantly from the start of this month when they had nearly disappeared. If we end up seeing downside in traditional markets as a result of the events this week, it would be ideal to see Bitcoin at least continue sideways rather than crashing alongside stocks. So guys, I am going to continue to keep you updated on these massive events coming up, not only this week, but also during the future. So whenever we have a big week, I'm going to make another of these videos. So if you enjoyed today's video, make sure to subscribe and activate the bell icon. Thank you so much for watching. I will see you guys in the next one.